consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Messer and Tim Stenevec bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Bloomberg Markets with Paul Sweeney.
I'm looking at just brutal losses in the fixed income market. What's happening in the commercial real estate biz? Do we have a problem? How big is it going to get? It seems like people want a job, they can get a job. You can't have a recession in that kind of scenario, can you?
Breaking market news and insight from Bloomberg experts.
Banks have to either raise capital or shrink their balance sheet.
Pricing power remains strong.
The best way to predict what the Fed's going to do is think about what they should have done a year ago.
Jay Powell's never going to say never.
Bloomberg News breaking down all the market action out there.
This is Bloomberg Markets with Paul Sweeney on Bloomberg Radio.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City. Madison Mills, Paul Sweeney here with you. We are streaming live on YouTube. You can go to YouTube and just check out Bloomberg Global News. You'll find us there. Coming up on the show, we're going to check in with these markets here. We're going to speak with Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence. We've got a Fed meeting coming up in a couple of weeks. We want to see about where the Fed is going to go one time or more in terms of rate hikes. So we're going to have that for you. Plus, we're going to check in with Kara Murphy, CIO at Kestra Investment Management. We want to get her call on these markets. But first, let's kick it off with John Tucker to get a Bloomberg Business Flash. John, what do you have for us?
All right, just to recap, I mean, this is having absolutely no impact on markets, but to recap the story that you guys were doing for the top of the hour, former President Trump saying he's been notified he's a target in the Justice Department's probe into efforts to overturn the election results in 2020. That means he's likely to be charged with federal crimes. Right now, the major averages, they are mixed. As you mentioned before, Paul, a kind of a mixed picture of consumer spending. Figures this morning show retail sales rose in June by less than forecast. If you strip out autos and also gasoline, sales climbed 0.3%, and that was right on target. Some, I'll call it tertiary data coming across the Bloomberg right now. The NHAB Housing Market Index coming in at 56. That's a point higher than the previous month, right on target for July for the estimates from economists surveyed by Bloomberg. In addition to that, business inventories are up 0.2%. Again, that's right on target. Howard Ward at Gabelli Funds, talked to him a little earlier. He says one of the big obstacles to stocks that has been removed from the markets.
The big boogeyman during this whole decline in the market over the last year and a half was concerns about inflation and rates. Well, I think inflation has largely been slayed. It's en route to being diminished, to get back down to 2%.
Traders, meantime, betting the Fed's going to resume its tightening cycle next week is the Fed meeting. with a quarter point increase in the benchmark interest rate. That is now fully priced in the markets. S&P 500, 8 points higher. That's up 0.2%. We're at 4530 on the index. The Dow Jones Industrial Average up 224 points. And the NASDAQ 100 right now 70 points lower. That is down to about 0.5%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. And that's your Bloomberg Business Flash. Madison and Paul.
All right, John Tucker, thank you so much. We appreciate that. Madison Mills, thank you so much for joining us this morning.
So happy to be back, Paul.
A lot going on out there. We had some retail sales came in, as John was just reporting on. Look at that control group, up 0.6%. That's twice what the forecast was, and compared to last month of up 0.3%. So the consumers still out there. It's going to be really interesting to hear from the retailers later in this earnings season coming up. So looking at the markets, John, just reporting, kind of red and green on the screen. Let's check in and see where some action is. Bailey Lipschultz, markets correspondent for Bloomberg News, joins us here in our Bloomberg Interactive Broker studio. Bailey, what do you got?
Yeah, finally, I love earnings season because we have reasons for stocks to move. So while you do have Microsoft, Amazon, Apple, NVIDIA, Google all trading to the downside, you have strong moves higher in the like of Schwab, Bank of America, Morgan Stanley, all after quarterly results. Wall Street very much had been talking down their expectations, but when you look at the prints coming across the board, Morgan Stanley jumping as revenue beat and cost despite cost rising, Bank of America's trading arm helping profits beat expectations, and Charles Schwab management talking about deposit growth by year end. So all three stocks in the green. Top performer in the S&P 500 this morning is Schwab. Earnings season is here in full force, and we will get results from big tech coming over the next few weeks, but it does seem like the results we've received so far have been better than feared, at least.
Yeah, I want to see. We're going to talk to Allison Williams and Herman Chan of Bloomberg Intelligence in the next hour about these bank earnings. I want to ask about, what are the companies saying, the banks saying about that real estate loan risk out there? Just as I walk from Penn Station here to Bloomberg this morning, again, you walk past a lot of really awesome office buildings, but not a lot of people in them. And I wonder what that means. At some point, it's going to have to come home to roost.
Well, it's even interesting here where we are on the corner of Lex and 59th, because we obviously have Bloomingdale's, but you look at all the open retail area, and that's not even discounting who knows what's above, because I don't really know offices. Right. But when everything seems empty, it's not optimistic, at least.
Which has been so upsetting for me, because pre-pandemic I used to do a little lunch shopping, and now the only option I have is Bloomingdale's, so I'm being very negatively impacted by this. Bailey, I also want to talk to you about this Jeffries note that came out today on Apple, which I found incredibly hilarious. They call Apple the most boring buy out there. They're basically like, yeah, you got to do it. You got to have Apple, but it's not an exciting stock to them anymore in terms of growth values and projections. What are your sources telling you about the likes of Apple and that Magnificent Seven moving forward?
Well, Apple's been such an interesting topic to discuss with active managers, because when they look at the rush that we saw on anything around AI, a lot of people were quick to point out that across the Magnificent Seven, for the most part, Apple and Amazon don't have the clearest shot. So it's not like you're looking at a Microsoft and their investment in OpenAI. You're not looking at Tesla, which I guess who knows what Elon Musk is going to do there. But if fund flows are coming back, Apple accounts for more than 7.5% of the S&P 500.
Just itself? Holy cow.
Yeah.
And within the NASDAQ, it's just over 12%. It trails the Microsoft. But so when you see money going into the SPY, when it goes into the Qs, the TQQQ, which is the triple lever to the upside, NASDAQ 100, that's got to go somewhere. So that's part of the reason that some folks have been a little bit skeptical or more cautious on Apple, just because when money is flowing in, it has to buy stock. But again, when you look at it across Wall Street right now, it trades at $193. 34 buys, 13 holds, 4 sells, so not a screaming buy. Average price target implies a drop of 1%, but it is hard, I have to imagine, if you're building a portfolio, to go underweight Apple, just given its resiliency.
Yeah, absolutely. I mean, I think a lot of folks are saying, again, it's almost a consumer staple. I mean, now, it's just so ubiquitous in American. But you think about the free cash flow, and to me, that's one of the bigger issues for this stock. What do they do with all this free cash flow? It doesn't seem like there's anything of size they could buy that would move the needle. So it's just all about buying back stock.
Well, potentially what they do is invest in something like the headset, and this is going to be the first earnings call and situation where people are going to be able to ask questions about that headset since they announced it. So I can't wait to hear how they justify the investment there.
Well, the funny thing with the headset is it's so interesting because it reminds me of, obviously Apple's released a number of products that have changed the way we live. But
Yeah.
I remember when they came out with the pen, and it was like, how many people are going to spend $180 on a pen? And I know plenty of bankers who were like, yeah, I'll spend $180 on a pen, but I'm
Right.
not going to. Whereas the headset, if Zuck is right, if the future is that, it makes sense, and people have
What's
loyalty.
the price for a headset?
3,500? Is that right?
Something very high. That sounds right.
It's close to that, you guys. I might be wrong, but it's something in the $3,500 range.
Matt Miller, I assume, will be an early adapter.
He's gonna get it as soon as possible. That's true.
So, on the banks here, one of the banks I'm going to be looking for after the close is Western Alliance.
Yep.
It's a bank. It's one of those regional banks that was kind of caught up in all the issues. But, a lot of the Wall Street analysts have kind of jumped on this thing and saying, I think this is a buy here. So it'll be interesting to see, what they say about deposits, what they say about loan growth. And that's going to be, I think, going to be really important for some of these regional banks. And again, we're going to have Herman Chan from Bloomberg Intelligence on the next hour to kind of preview that.
Well, the funny thing, not funny, but when you think about Western Alliance, if you asked me a year ago, I don't know that I would necessarily know who they were, but because of all the banking contagion and the crisis fears that we had, it became a household name. And again, it was trading pre-sell-off, pre-banking crisis concerns at $72, now at $43. So, Paul, to your point, if it can kind of follow Schwab's footsteps and allay those concerns, plenty of upside.
Yep, absolutely. All right. Bailey Lipschutz, thanks so much for joining us. Bailey covers all the markets for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. We got some eco data today. We've had a lot of economic data really over the last week and a half. A lot for the Federal Reserve to chew on as it thinks about its next rate decision. Let's bring in Ira Jersey. He covers all that interest rate stuff for Bloomberg Intelligence. He's down in the Princeton campus of Bloomberg Intelligence, the core HQ for BI. Ira, again, we had some retail sales number today. Some industrial production numbers came in, I guess, a little bit weaker than expected. Anything here over the last several days changes your opinion that this Federal Reserve is probably going to raise rates here at the end of the month, and then after that, it's I guess still a guessing game.
Yeah, it is probably still a guessing game, Paul, afterward, especially since before the September meeting, we effectively get 2 months worth of data, right? So it's not just a single month like we kind of have now in between the June and July meetings. The data's been pretty mixed. Today's data is just proof of that. We had pretty weak industrial production numbers. That doesn't look good. The goods sector, manufacturing, is not doing well in the United States, and indeed globally. There's a slowdown in manufacturing, and then but on the other side, spending was really good. When you look at the control group, so this is the GDP input from the retail sales numbers this morning, and that was solid. So you have very mixed data in terms of what's gone on in the business sector and maybe setting up for a recession versus actual spending data, which looks pretty good.
So, Ira, in terms of what you anticipate the meeting minutes looking like coming out of this next Fed meeting next week, do you anticipate the majority of the conversation being about what the Fed is going to do in the fall versus a justification for what we expect to be a hike next week?
Yeah, so I don't think the minutes of this meeting will be particularly interesting because there's not a summary of economic projections that are coming out. So they don't, they always tweak, in the intermeeting period, kind of here's what happened. But those big discussions about more forward-looking information will come more from the September meeting when we do get a new dot plot summary of economic projections. Where do we think unemployment and GDP and everything else is going to be? So I think September will be much more telling in that regard. My feeling is that the Fed this week is going to say, okay, we're hiking again. They basically promised that they were going to, and they'll say, but we're going to reevaluate meeting by meeting, and they'll continue with that type of discussion. You go back to this time last year, and the Fed was still saying we're continuing to increase interest rates, right? So they were almost promising that they were going to keep going, not necessarily at what pace, but that they were going to keep hiking rates. And now they're significantly more data dependent than they were a year ago for each in between each individual meeting. So this is kind of like a placeholder meeting, I think, in a way, where September can be much more telling as to the future of interest rates.
Is this Federal Reserve ever going to come out and say basically, hey, we did a good job. We got inflation down. It's going in the right direction. We were aggressive, but it's working.
Well, they've already started to say that Jay Powell during his press conference and in some of the other conferences and meetings that he's had in between, whether it was before Congress or over in Portugal at the ECB summit. He's basically said, look, inflation is trending in a direction that we like, but the job's not done. So I think from his standpoint and from their standpoint, they won't say anything like that until it's very clear that the PCE deflator is below 3%. Once you get there, I think they can say that we're approaching our target, and then they'll pat themselves on the back maybe a little bit and basically say, job's done, but we're being cautious.
And what's your timeline these days, Ira, for when we can anticipate that celebration?
Yeah, so I think before the end of the year, the Fed is going to be able to say, we've gotten inflation back toward or near our target level of 2%. So because of that, we can remain on hold, and they'll always continue to use the buzzwords of we're continuing to watch economic activity and inflation and jobs and everything else. I don't think that they're going to cut rates until later next year, so a little bit beyond what's being priced. The market's still pricing for cuts in the first quarter of next year, or the first cut in the first quarter of next year. I think they're not going to ultimately cut until later next year. Once they do, I think that the economy is going to be weak enough that they'll have to cut much more aggressively maybe than what the market's pricing.
Well, to Paul's point about when they can start to celebrate, I wonder when we might have a Fed that does a little bit of a post-mortem and looks at the lag in raising interest rates and maybe is open to discussing in an effort to build some credibility that they maybe dropped the ball a little bit too early on. Do you anticipate anything like that happening?
Well, I think everyone and the Federal Reserve always does some self-reflection, and certainly they can be criticized for, not even the rate hikes. Like if I were to do a post-mortem on what the Federal Reserve did and the actions that it took, I think the single biggest thing that they did was they continued quantitative easing too long. Mm-hmm. They could have ended quantitative easing in the spring of 2021, and started to hike in early 2022, similar to what they did, but they didn't take any hawkish actions until maybe it was a little bit too late. Now, once they got going, they obviously, as we know, they really got going. Yeah. and kind of played catch up. So, and it's not unusual for central banks to do that because they don't want to be seen as hiking and tightening monetary policy too early. But there's other actions now that they can take other than the blunt instrument of actually hiking interest rates, especially when they have balance sheet policy that they can play with.
Ira, when you talk to institutional investors, what's the recession talk these days? Do people think it's kind of off the table, or at the very, very least it's going to be short and shallow?
Yeah, most of the people that I talk to think that we're going to have some form of soft landing. I don't know if it's a recession, how you define a recession obviously matters a lot. Whether we get a recession that the NBER classifies as one, I think is still very much up in the air, and a lot of investors are kind of looking past that and saying, okay, look, when we look at the hard data, when we look at the retail sales data, which is a hard data point because it's actual sales in the economy, that looks pretty good, and employment hasn't yet completely rolled over. Although we have slowing job growth, we don't yet have job losses. It's pretty rare to have a recession and no job losses. So I think a lot of people are very hopeful that we'll have a soft landing. I think rates investors are a little more skeptical and a little more pessimistic than, say, equity investors that I've spoken to. But there's a lot of people who are confused because we do have this variety of data, like I said, that you look at the ISM surveys and they're suggesting that we're going to have a significant slowdown, but at the same time you get retail sales numbers like we had this morning and people are like, maybe the survey data is not going to be right.
All right, we're going to be on alert for more data. We obviously have at the Fed next week with their announcement. Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence, joining us there. Looking at the markets, a little bit of red and green on the screen. The S&P up about 0.2%. The Dow up a little bit more, back close to 0.6%. But the NASDAQ off about 0.2%. We're going to have more coming up. This is Bloomberg. Let's get some company news right now with Dan Schwartzman.
Thanks, Paul. Bank of America showed impressive gains as second quarter profits soared due to a surprise gains brought in by fixed income and equity traders. Those gains were able to mask a slight miss in expected net interest income, which still came in at over $14 billion. Bank of America's deposits, though, did fall over 1.5% to $1.88 trillion, which was less than the 3% drop analysts had predicted. BlackRock says Saudi Aramco Chief Executive Officer Amin Nasser is joining its board. The story from Bloomberg's Charlie Pellet.
It reflects the asset manager's commitment to the Middle East as part of its long-term strategy. CEO Larry Fink said in a statement, Nasser has led the world's biggest oil producer since 2015, including overseeing its public listing, and provides BlackRock with, quote, a unique perspective on key issues facing the company and its clients. According to data compiled by Bloomberg, BlackRock, the world's biggest asset manager, has a $2.4 billion interest in the oil producer. In New York, Charlie Pellet, Bloomberg Radio.
Thanks, Charlie. Visa and MasterCard have been accused of overcharging the Square payment platform, resulting in an antitrust lawsuit. The suit alleges that the so-called interchange fees were inflated so that the two credit card companies can maintain their market power. Block Incorporated, which is a new name of Square, says the inflated fees resulted in higher prices for consumers. NBC Universal raising prices on its Peacock streaming service for $1 or $2 more a month, depending.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major averages right now, they are mixed. Traders fully pricing in a quarter-point hike in interest rates by the Federal Reserve at their meeting next week. 10-year Treasury yield, that is falling after figures on industrial production and retail sales. They missed estimates. Then you have the earnings today, the bank earnings. Bank of America, a surprise gain from its core businesses. Morgan Stanley, saw a slowdown in trading and investment banking. Right now in the S&P 500, you have 8 of the 11 major industry groups are higher. Energy, the best performer. Information technology. Right now, that's the biggest drag. The S&P 500, 6 points higher. That's up 0.1% at 45.29. The NASDAQ 100, 71 points lower. That's down 0.5%. And the Dow Jones Industrial Average is up 201 points. That's a rise of 0.6%. 2-year yield at 4.70, 3 basis points lower. The 10-year, 4 basis points lower. That's at 3.76. And we check the markets for you all day long. right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. You look like you just stepped off a yacht.
Exactly, and I'm about to
That's
hop
a
back
good look
on
for
one.
you.
It is a good look for me. See, I want to be dressed in golf attire in case somebody walks past the studio looking for a
And
fourth.
says, get on my jet, we're going to Bermuda
Exactly.
to play 18.
That's
I want to
how
be
I
that
always
guy.
dress, you guys.
All right.
That's
Good
how
luck.
it works.
Good luck on that one.
Good luck on that one. I've been doing this for 14 years, nothing so far.
Oh, it's
Exactly.
only a matter of time, Paul.
Exactly. All right, listen, we had after a brutal 2022 in equities and fixed income, 2023 is treating investors a lot better here. It started the first half of the year, S&P up about 15% or so. We've added a little bit more to that since here in July. The question for a lot of folks is, now what do we do? So let's check in with somebody who does this stuff for a living. Kara Murphy, CIO of Kestra Investment Management. She joins us live here in our Bloomberg Interactive Broker studio. No phoning it in today. So Kara, a good first half of the year for a lot of investors, particularly those that owned Apple and Amazon and Meta and things like that. What are you telling your clients here as we kind of kick off the second half?
Well, thanks so much for having me here. And we've called 2023 the revenge of the growth stocks.
Okay.
So it's all those stocks that underperformed so much in 2022 came back with a vengeance and really turned on a dime in the first half. But when you think about, largest 7 stocks in the S&P were up about 90% year to date. Just mathematically speaking, that can't continue forever. So we've started to see the market broaden out a little bit. Russell 2 is coming back a little bit, seeing some mid caps do better. So that's healthy for the market. So, and there's a fair amount of economic momentum as well. We're still cautious on kind of where we are in the economic cycle, but consumers remain really strong. Balance sheets are relatively hefty. So, in my
Growth is painful, change is painful, but nothing is as painful as staying stuck where you do not belong.
Busy street, every light song. Take me home. I can't sleep, I can't eat. Take me home. Piercing sound running over me. Lost in a state of loneliness. Thousands of faces at every turn.
한국에 오면 먹어야죠.
먹어도 먹어도 끝이 없는 나라. 감당할 수 있겠니? What the
gusta cuando bailas así. Teniéndote tan cerca de mí. Closer to the sky, to your eyes. Closer to the sky. Closer to the sky.
believe in education.